we're going to talk about interest rates 101.
Okay, so interest rates. Interest rates have been a pain in everyone's butt
No,
for the last 2 years.
no, they're not a pain. They're necessary for our economy, for the Bank of Canada to feel like they're doing something for...
Well, they were necessary, yes. They were necessary to
On
tame
a certain
inflation.
extent, though.
To tame inflation, yes, they were necessary.
On a certain extent.
To a certain extent, yes. But I think one of the biggest, and just kind of backtracking a little bit, is one of the biggest problems that, I mean, I think everyone has, was that perhaps the Bank of Canada wasn't as straight up as they should have been. Back in 2020, 21, they were very clear that interest rates would remain where they were up until 2023.
Yeah, even I actually, CBC Radio had a show recently, a few weeks ago, where they had, consumers like Canadians talking about their experience. And the consistent message was, because most of these people that were talking on the show was exactly that. Like, they were very confident that the right move for them was to lock in on a variable rate. And a lot of people went super confidently that they will be okay to. Yeah. And most people didn't even stretch themselves when they were qualifying for a mortgage, because the Bank of Canada built that confidence and told the public, rates are not going up anytime soon.
I think it was not just the Bank of Canada, though. I wanna say, like, I gotta admit, like, it was kind of like across the board. There was people that had been in a variable rate for a long time, and they said that variable rates will always outperform a fixed rate, etc. So there was that confidence with variable rates. And I remember having this conversation where it's like, okay, a variable rate, one of our mortgages was at 1.3%. Okay. Right? And having a conversation with a mortgage broker, and we're like, and we both agreed. It's not just like the mortgage broker that told me this, but I agreed to too, where, okay, let's assume that the rates go up 6 times. And okay, so they'll go up 6 times, 0.25 basis points. That's 1.5%. But what we completely missed is that it's not, they don't have to go up just by 25 basis points. They can go up by 1 full percentage point, which is what happened, right? Yeah. So I think that was the biggest issue, that people just relied on current media and what the Bank of Canada was saying, what the general public was saying, and including ourselves. And I got to take...
How would you know?
I got to take responsibility for this, full responsibility for this, and, having conversations with clients, even on our own. We have 3 mortgages that are variable, right? Not doing our homework and looking at history. You're asking why, how? History.
But how would you know it would happen so quickly? We knew rates would, at some point in time, would probably go up.
Because when it happened last time, it was the exact same scenario. They went up very quickly. And, everyone got caught by surprise. Now, the good thing, on the good side, the flip side, is that back in the early 2000s, this was back in like 2000, 2002, when this happened, when rates, the benchmark rate was around 5%, where it's now. What happened was it cooled the market significantly. The one indicator that's still not on our side for rates to come down right now is unemployment. So unemployment went up quite a bit.
Yeah.
And as soon as that happened, just as quick as they went up, they went down. So it went from 5%, the benchmark rate, and say, I'm not using the exact dates, but it's around this time. Say in late 2000, it went up to 5%. Within 18 months, it was back down at 2.25%.
So what's your speculation right now? Like, do you think, because right now we're still at inflation is still at, I think, 3.3?
It's higher, it's higher, but GDP contracted more than they thought it would. So I think that, I personally think that, and I don't like to speculate, right? But if history serves us right, the numbers for unemployment are coming out within the next month. If those numbers are not as strong as they have been for the last 6 months, right, where there was expectations of employment shrinking, and it didn't. So if employment shrinks, unemployment goes up, I think that going into 2024, mid 2024, late 2024, we're going to start seeing the variable rates coming down, maybe sooner.
Don't you think it's too soon though? Like having an increase
Possibly,
being
right?
announced so recently and not still seeing the full impact of what high rates, the impact of these increases.
Well, I think
Don't you think it's a little bit too soon for us to talk about rates starting to come down when
Well, no, I'm saying end of mid to end of last
isn't
year,
that
right?
still
Maybe,
too soon?
maybe, but
You know?
that's it.
It takes a
That's
few
what I'm
months
saying.
before it
But that's what I'm saying.
creates-
It's gonna depend on the numbers for the unemployment. I think that's the main thing right now. It's unemployment because housing is very relatively steady, like literally year to year, 2022, 2023. This time around, the last 2 months have been almost at par. You know, so it's very very stable. Housing is very stable, but yeah, employment growth is very strong. Again, I think one of the reasons why we might not see rates come down, if you ask me, what would be the one thing that would prevent rates from coming down would be immigration. If we keep on bringing the amount of immigration, like the levels of immigration, which is fine, Canada thrives on immigration, right? We're immigrants. But if we keep on seeing those levels of immigration, I think there's going to be upward pressure on housing and also jobs, right?
there is a goal, like
Yeah.
you know, Immigration Canada, like the RCC has a goal of about 1 million immigrants per year.
Yeah,
no?
I don't know. Yeah, half a million, I think.
Yeah, 500,000. I would need to look at the number, but it's an ambitious number. And the reality is, most of those immigrants will come to Ontario.
A lot of them. Yeah.
Yeah, most of them. So if that's the case, I mean, is there any teamwork being done between these two, you know, completely different institutions where things are being looked in all aspects, where they're considering immigration, they're considering employment, unemployment, they're considering many other factors that are driving, you know, our economy to be where it's at, housing prices, basic goods, and so forth. Are all these things being considered when we are seeing interest rates going up? Are all these things being considered when we're seeing our governments, you know, creating all these bills and programs to make sure they alleviate certain things in our markets? But like, I just find like there's always some sort of negative impact from one another, right?
It's a give and take, right?
Right. So, but the one, you know, the elephant in the room is affordability, and there is no indicator that affordability will get better, at least in the foreseeable future, because if you do have what you say, you know, the Bank of Canada starts seeing, you know, unemployment increase, they have to stimulate the economy a bit more, you know, will likely interest rates will come down again. There's going to be demand for there's going to be an increase in demand, and that's going to trigger again prices to go up. The reality is, when we saw the environment last year where prices were significantly higher than they are now in Q1 of 2022, it was still more attainable for a buyer to qualify for a mortgage than it is now, with prices being still lower. So what's the solution? Like, what would be an ideal scenario where all these schemes can be relatively okay or more reasonable for Canadians to feel okay, there's some light at the end of the tunnel, kind of thing?
I think it's. I think it has to be, like. I mean, it depends. Like when you mean affordability, if it's housing affordability, the only solution is supply. That's it.
And how do you control that?
Well, just removing red tape. You know, doing what, you know, the provincial government is doing. I mean, that's a good step. You know, trying to get, you know, the 3 triplex on a single family home.
But how
right?
long it would take for that?
It's going to take years. It's going to take years. Like the
And
city
then
of Ottawa hasn't even
we have a
implemented
million
that.
immigrants coming in every year. Like,
Yeah.
this is where I can understand the frustration, right? Like, you have all these people coming to Canada, and I mean, I'm an immigrant myself, and I'm so lucky and happy that I was able to come to this country. But is there something that we're not doing right to make sure that we provide to those immigrants also a better life? Because there's been situations of immigrants leaving Canada because they get so frustrated where they decide on compromising on their lifestyle and the quality of life to go to a city or a country that could offer them a basic need like housing, and we are seeing it out there. people that immigrated 2 years ago, or even people that have been in Canada for 15 years. The other day I saw this lady on she made a post, and she was frustrated. She's been in Canada for 15 years, and she has a child, and she had to make the difficult decision to leave the country because
and go where?
Huh?
And go where?
I'm not sure. She was leaving the country. I think she was from Latin America, or definitely a different country. But she was frustrated because employment was an issue, housing was an issue. She had a child. Education was an issue too for her. And then being able to give that child a decent lifestyle, right? And when we look at different factors of how much a Canadian makes, or what's the, how much do you need to, what amount of income do you need to generate to be able to give a child a decent lifestyle, right? For some people, and in some cases, it just becomes increasingly frustrated because parents can't give their children what they feel they deserve, right?
Yeah.
So we have that for some immigrants, right? But then we also have Canadians that, for example, have nowhere to go, right? This lady, for example, had an option. She's making an educated decision, and she made that decision. Difficult, sure, but she's making that decision. She has that option. What happens with the other half of the population that have nowhere to go, right? Like, that's where I think the frustration is being increased, and that's where, people are saying, okay, interest rates and so forth. But if we have to steer away from that topic and talk more about real estate, which is what we are experts on, because we're not
without getting too political, right?
Too political, but
I mean, it's something to bring up for sure, but at the end of the day, like, the glass, I'm a glass half full kind of guy, not half empty. So I like to think that we're in a great place here.
Yeah, we are.
We're in a great place, and sometimes the grass is not greener on the other side, right?
100%.
Sometimes, especially coming from country like Latin America or any other country,
100%.
Like there might be some things that you miss, or whatnot, and
there's always going to be a compromise.
Canada's cold as hell too.
Yeah,
it's hard. But anyways, going back to the conversation about interest rates, there's not like a one size fits all solution. Raising the rates, yes, puts pressure on anyone that owns any sort of debt, but it also eases inflation at the end of the day, right? Anyone looking to get into the market, yes, it can be more unaffordable in a way, but also there was a huge correction in prices, right? Literally a huge correction. Like, single family homes are $150,000 less than they were at the peak right now, right? So if you take into account the interest rate that you're paying over 5 years, versus that $150,000 dip, you're probably better off with the lower principal, right? So that's a conversation, for buyers, in a way, and also the rates are really high right now. If history proves us right, they're going to go down, right?
And this is what I was talking about when we were filming our market update, is that if you have the opportunity to buy something today, although it's challenging, but if you can, do it, because once the environment changes where rates come down, there will be more competition, and it may even be more challenging. Right now, you can do your due diligence, you can have your financing condition, you can do your inspections. Last year, none of that existed, pretty much. People were making very rushed decisions, and there was barely any chance for someone to even think about, anything else but just putting an offer for the best number possible and just trying to hope for the best. Yes, affordability is tough, but people forget about where we were before. On Q1 of 2022, where none of that existed. Like, you would just go all in. And that's it.
Exactly. Yeah. And I think it's up to us real estate agents to educate the consumer and the buyers and explain these things, right? Because media plays a huge role, right? This is what the consumer sees. Interest rates all-time high, prices are going down, crashing, the cottage market is crashing. I mean, you have to really rely on the experts, and unfortunately social media and media in general,
speculators too.
There's a lot of speculation, and it's also headlines, and headlines are meant, there is a reason why they're headlines, they're meant to grab your attention. grab your attention. If we sit down and get into like the actual real facts, they're not as interesting for a headline. And the real facts are that there was a huge correction. Granted, there was a huge correction, but there's no crashing market, at least not right now, right? Luckily, there's a lot of different safeguards that the financial regulators have in place, like the stress test, for example, that are helping us stay afloat and not have like a crazy amount of foreclosures or powers of sale, right? So luckily, that's a good thing about how regulated the financial markets are here in Canada. But yeah, well, I think that's it for interest rates. I mean, just to kind of do a brief summary, the rates have gone up significantly over the last year. They paused twice at the beginning of the year, and then the market started heating up in May of 2023, which forced the Bank of Canada to raise the rates again by 25 basis points in June.
Do you think that was
and 25
necessary,
basis points
though?
in July? It was necessary.
Okay.
It was necessary because the trajectory where it was going, it was like 2021, 2022, 2.0. Right. There was just multiple offers were starting in May.
We did.
And it was just not realistic. Like, it was like that, like pent up demand. Like, like we people got a little bit too comfortable, and there was still money left over from all the money that got printed for the last 2-3 years.
That little time spot on this year where we had things picking up is a perfect example of once we see more buyers' confidence and more competition, the market can shift.
Can shift in a second.
Instantly.
Yeah, it can shift right away. And even right now.
Yeah.
We're seeing it right now. They paused, not the same level of April, May of this year, but right now in September, they announced a pause, right? And we're seeing more confidence. We're getting calls, You literally had a buyer that was on the fence for 3 months, and they pulled the trigger over the weekend, right?
Yeah.
There's more confidence, right? There, people kind of know where they're standing now. So that's a prime example, of don't wait. Don't wait for the crowd,
Yeah.
Get your numbers lined up, like you said. If you can afford to get into the market, get into the market.
Yeah.
That's
It's never going to be perfect, but it's always better today than tomorrow.
There was an interesting line, actually, I read somewhere, probably social media, and it said time in the market will always beat timing the market.
Yeah.
Don't try and time the market and try and get in at the same. Yes, you can be strategic about it, but the time in the market will always outpace trying to time the market and try and time that move, right? So, bang on. If you can afford to get into it, get into it. Get the right.
Yeah.
Don't get into some crappy.
Yeah, and of course, every situation is different. If you're in a great rate and you're comfortable, you don't feel the urgency to move, and you're in a situation where you feel like it's the right time to wait, fair enough. If for some people maybe not the best environment, but for others, if you're waiting for the market to become more affordable, it's not going to really happen. Like, affordability is really, things may fluctuate. It may become a little bit easier to borrow money, but the reality is not going to be a substantial difference between today and a year from now when rates start coming. If anything, maybe a little bit more competitive. So I think that sums it all well.
I think that's it for rates.